Another fundraise of 1,500 crore rupees from Karnataka Bank. So let's welcome on board Srikrishnan, the MD and CEO at Karnataka Bank, joining in on the show right now. Mr. Krishnan, great to have you on the show. Congratulations, firstly, on a healthy fundraise. But you still have a window for another 700 crore rupees because all you've done is 800 so far. Tell us about where capital adequacy stands and how is it that one should look at it going forward.
Thank you for the compliments on the fundraise. Essentially, as a bank, we do have a 3-year outlook in terms of the plan and the growth. As we have already given the guidance on the asset book, we would be growing in and around about 17 to 18%. So every 10,000 crores of asset that grows, we need about 1,000 crore of capital. So obviously, we need to fund for that. The second is that we have an enabling resolution right now for 1,500 crores. Out of which 800 has been already allotted by way of preference allotments to very marquee investors. And these are all long-term, deep-pocketed investors who would stay with the bank. And it actually helps us in broad-basing our overall cap table with more institutional names. As far as the capital adequacy is concerned, we are comfortable right now. And it has been a guidance that, including our tier 2, we would always stay upwards of 17%. And this is going to continue. But as I said, that asset growth and anything that we require in terms of stability requires capital, and which is why we are raising this. And there will be a follow-up round also. The second part to this is that we do have tier 2, where it is expensive, it is at 12%. And there is a callable option for us in November and in February. So if all is well, we might even exercise that option and do the follow-up round, which in any case is enabled as per the resolution passed by the board of directors yesterday. So that kind of gives you a sense on what the plans are and how it will shape up.
Option for tier 2 capital in November and in Feb. Is this independent of the fundraise?
No, the existing tier 2, there are calls that the bank can exercise as per the fundraise that happened several years ago, and that is due for the call option in November and in February. So that is independent of this fundraise. The second is that utilization of the proceeds of this fundraise will go towards growth capital and growing the book and also the infrastructure investment that are required in technology and products and people. So what we have enabled is that a total fundraise of about 1,500 crores, out of which 800 has been announced yet. And we actually will have a balance of 700 crores, which we will raise as a follow-up round. It could happen in the second half of this financial year.
Right. And, I wanted to follow up on that. Is it going to be new investors or is it going to be existing investors?
Well, we will have to look at the market at that point of time, and we have enabled, all kinds of instruments, which include pref allotments or QIP or rights issue. So all of whatever instruments are permitted for the capital raise has already been approved.
Right. So was there, larger interest in the current round from other investors as well? And what do the current investors bring to the table?
Well, yes, the interest levels are high from institutions. They are seeing transformation agenda being executed by the new management in Karnataka Bank. So obviously, transformation doesn't happen overnight. It takes a couple of quarters and a couple of years. So they are seeing that we are on the right trajectory, and that is how the interest has been, and which is how it has been reflected in the trading volumes also. Having said that, in this round, we have limited to certain names. And yes, we did have interest much more than this. But we'll definitely consider those names in the round 2, which is bound to happen by the end of this financial year.
And what about the loan growth? You suggested last we spoke that you were calibrating loan growth guidance that continues at 13%, or would you be looking at changing it given that the market growth has sustained?
So we will grow with the market for sure. The market has been projected to grow at 17 to 18%. So while our growth will remain at about 13 to 15%, But with the capital in place, we believe that we have the right kind of strengths to grow this aggressively. But we will not compromise on quality. We will also make sure that the rest of the metrics related to NIM as well as our overall cost of funding is something that we will take care of. So we will do this on a very calibrated basis, but continue to grow for sure, and that is the agenda right now.
And on your tier 2 capital, you had also suggested a 12% coupon. So how are you looking at the cost of funds? Any impact, you think, on the Indian bonds being included in the JP Morgan bond index?
So the interest rate cycle is something that has already peaked, and that is our view. And I think the first quarter of next year, we would see this, being very steady, if not rising. Now that gives us a lot of opportunity because one, the debt market, which has not been that developed, with this inclusion by JP Morgan, certainly has provided a lot of openings for all players. Secondly, we are again dependent on the rating that we get post our couple of quarters, and also making sure that if the interest rate cycle is favorable, we would go in for a tier 2, and this is something that we have already got an enabling approval in the last AGM itself. So we will be essentially looking at a mix of both tier 1 and tier 2 as we go along, to make sure that it is like rightly funded for the growth of the bank. And obviously, the current rates at which tier 2 has been raised are expensive, which is why we are looking at a retiring option there.
Sure. Your deposit growth challenges on ground, they clearly continue. Is that a concern for you?
So stickiness as far as the liabilities is concerned, Karnataka Bank has had a history where a lot of our liability customers do kind of maintain sufficient, liquid funds. The second part is that traditionally Q3 has always been good for the bank, because a lot of this agri customers post their harvest season bring back the funds into the bank. And that also has a very, very clear bearing on the CASA. But CASA right now, we are at about 33%, which is quite healthy, and will continue to be so. So we do have a lot of stickiness in deposits. On the growth part related to deposit, it is not growing as in the industry as the asset side of the book. Having said that, we are comfortable right now because our CD ratio has been only 70%. So which means that, we do have headroom for growing the asset book without having to really get worried about the liability side. But yes, we need to chase both sides of the balance sheet.
All right, good to have you on board. Thanks so much for joining in and giving us